All right, welcome, guys. This is Peter Voogd, the founder of the prestigious Game Changers Academy. And thank you for tuning into our monthly Millionaire video series where we interview the world's most elite and successful entrepreneurs, CEOs, entertainers, game changers, and investors, and people that I really feel have a massive impact on industries and people that I have respect for, and those making a big difference, not just in their market or in their industry, but really in the world. And today we have a very important guest because of the current landscape of the financial world and in society, and one that I feel can make a pretty big difference on your life, on your business, and really on your financial future. And everyone on this call wants to protect their wealth, wants to grow their wealth, wants to grow their money. And someone with this much experience can really cut your learning curve in half and help you get to the next level without making a ton of mistakes. And I'm sure he's made mistakes. We'll talk about them. You guys have seen his very, very long and respectful bio. So Chad Willardson, I'm excited to have you. Thank you so much, man, for being here with us.
Appreciate you. Thanks for having me on. I'm excited to be here. For
Yes,
sure.
man. So in terms of, I want to start kind of with your, I don't want to say infatuation, but kind of your backstory on getting involved in the financial industry, in money, in Wall Street. Was it something you always liked and were infatuated by as a kid? Did your parents get you into it? What was kind of your backstory and how you got into the world of money and finances?
Yeah, so I was always interested in just how businesses worked and money. I remember doing like little jobs at sales jobs or whatever for school fundraisers and stuff. And I was always interested in stuff that had unlimited potential. And I didn't invest. I wasn't like a kid investor per se, but as soon as I was finishing college, I got an economics degree and I was interviewing. I was really fascinated by the Goldman Sachs and the Merrill Lynch and these big Wall Street banks. And so 20 years ago, I did an internship and then eventually got hired straight out of college at Merrill Lynch Wealth Management. And so kind of the excitement of the stock market, this was just after the tech crash 2001, 2002. And my career started. I was in the training program of the Wall Street banks and just kind of cutting my teeth. It was a real Shark Tank. It was crazy. I mean, no one wanted you to succeed for sure. I remember my first day showing up and realizing like who the guys were that really wanted to kind of either take advantage of me, use me for my contacts or my free labor essentially, or the guys who just kind of wanted to crush me and make sure I never made it on Wall Street. So it was kind of like a fire hose in the face starting there, but I learned a lot for sure.
But then, so fast forward, despite all that, you still behind the scenes reached top 2% of wealth advisors and you continue to make your way to the top. So
Yeah,
despite everyone kind of not having your back and kind of the dog eat dog world, which makes sense, that's what people view it as, you
right.
reached the top 2%. So let's go through a couple things that you did to get to that 2%. And then we'll talk about some of the sketchiness behind the scenes that you realized, which made you pivot. But
Yeah,
there's a lot of people out there in entrepreneurship, in crypto, in the financial world that want to
right,
reach the top 2%, but
right.
never do. It's so crowded. So what are some techniques or tactics that you use pretty quickly to get to that top level?
I committed myself and I went all in. So my signature on my email is fully invested. And I decided like if I'm gonna do this, I'm gonna try to be the best. And that really took me on a path of how much can I learn and absorb and just sponge and soak it up. And so it's like I'm gonna study and read I'm gonna consume everything on stock market investing and real estate investing. Like I'm going to consume everything on wealth building. And from day one, that's what I was committed to doing. So I put in the extra time while my peers and colleagues were out partying and doing whatever they wanted. Like I was in the trenches trying to figure out what this game is all about. And I think I see that in the same way of crypto and NFTs in that world right now, like people who are early, people who are diving in to become experts and to really get a leg up. In 20 years, we're going to know who was really committed, who was putting in that time. And that's what happened with me. It was like, I'm just going to grind. I'm going to figure this out. And within 4 years, I'd say 90 to 95% of the people who started at the same time as me in California, they were all gone out of the industry. They'd
Wow.
flushed out, they'd failed, they hadn't met it was really hard to keep your job. Like every 2 months, you had to hit certain numbers of new clients and assets under management, and it was very difficult. But fortunately, I survived. I remember someone telling me, like, if you can just grind it out for the first 5 years, like you could potentially have a career that is provides for an amazing life. And so I just kept that commitment going until I reached it.
So let's fast forward. You reach it.
Right.
You're part of the top 2% of wealth advisors, and you're realizing that you could make an absolute killing and you could crush it financially. And you saw a path to do that. But there were certain things that you didn't like that you thought were sketchy behind the scenes. And you decided to kind of opt out, which is one of the reasons I respect you and why you're on this call, is because you're a world-class human first. If something doesn't feel right, if it goes against your values, you're not going to go all in, even if you can make money, which I love. So let's talk about kind of that frame of mind of what started happening and what you saw behind the scenes and just things that rubbed you the wrong way. Because people hear the stories, Chad, they just don't know sometimes behind the scenes what happens.
So to me, what bothers me is conflicts of interest. Like, I don't like having a conflict of what's best for me and what's best for my client. Like, these people are trusting me. These are relationships. These are people I've gotten to know that like share everything about their life and their financial goals and their family and everything with me. I can't then do what's best for my employer, the Wall Street Bank, that's at the expense of these relationships. To me, it's all about people. And so the more the conflicts of interest got in my face, the more I resisted, the more I was kind of like, I'm not playing this game. And I'm at the top of this food chain. And I was pushing back and pushing back. And when I realized it wasn't going to make a difference, they were more about the profits and the quarterly earnings than they were about what's right for the clients. Then it was like, I had to opt out and say, you know what? I'm going to take a huge step back and I'm going to take a big risk. I was 32 years old at the time. I had a few kids. I have 5 kids now, but like I had a young family. I remember Morgan Stanley offered me $3.6 million to basically leave Merrill Lynch and join Morgan Stanley. And I didn't tell my wife that until like 5 years later, because she would have been like, what are you doing? What do you mean you're not taking that? But I was like, I couldn't do it because it wasn't right. I was going to go to another Wall Street bank, have the same conflicts, have the same problems, but I just had a fat bank account at 32. And I was like, you know what? The right thing is I'm going to leave, start my own business, become independent, become a fiduciary for investors and entrepreneurs so that I can just do what's right for them. And eventually I'm going to make all that back up. Like, it's going to be the right move for the right reasons, and good karma is going to come back to me. And I can report that it has. We're a way bigger business than when I left at the top of Merrill Lynch.
Well, like just talking to you, my gut says that one of the reasons you reached the peak so quick and one of the reasons you're crushing it now is because trust and because relationships. Sure. And think about this, guys, logically, and conceptualize that the reason he got to the top was because people trusted him genuinely. Imagine if he stayed with Wall Street and then started to be shisty or have conflict of interest, he would lose the trust. So it's almost like you turning down that 3.6 million was the best thing you could have done, in a weird way.
Yep. I think the confidence comes from doing what you know is right, even when it costs you money. So as a growing entrepreneur, it's like deep down inside, like, what should I be doing? What's the right path for me? And people know I tell them the truth. And so I'll tell them, like, I know you want to do that. That's not a good idea. Or you're about to get ripped off. Like, don't do something. I'm going to tell you the pros and the cons, the upside and the downside. I'm going to help you make great decisions as an entrepreneur, but I'm always going to tell you the truth. So I'm not the doctor that tells you, hey, it's okay, keep eating those double cheeseburgers when you're about to have a heart attack. Like, I'm going to tell you the truth every time. And I think people respect that and they trust that.
It might rub them the wrong way in the moment, or they might kind of be resentful, but I feel like they always respect you later on, because sometimes the things people don't want to hear are things they need to hear. So in terms of having 5 kids now, I now have 2 kids, super young. One's 2 and 3 months and one's 9 months. Awesome. Was any of your decision based off future legacy of like what you want to be proud of, or was that not in the picture at the time?
I think it was more about just being true to myself and to my values. And I'm a family man. I've been married 21 years this year, and when I got married, I was broke, by the way. I was just telling this on another podcast. I'm like, I was earning $6 an hour. We were college students. I could vacuum our apartment without unplugging the vacuum, like it was that small. And, we took a chance and we like, we just went for it. And I posted about that on LinkedIn the other day. Like when you have a happy home life, you're going to be a better business person. But I think I wanted to be doing what I knew was best for me and best for clients because that's something I would be proud of. And so, now my kids can do things in the business and learn about entrepreneurship. And it's awesome. That never would have happened if I stayed at Wall Street. And that's one thing I'll make a point on, Peter, is that like if you're an entrepreneur who's invested in a lot of newer stuff, if you're into crypto, if you're into real estate, if you're into all kinds of things, and you're an entrepreneur and you've got a high income, you're making seven figures, let's say, why are you taking financial and wealth advice from an employee at a bank who doesn't invest in that stuff, who doesn't understand that stuff, who doesn't have a high income, who's never taken risks or started their own business probably? It doesn't make sense to me. And so that's something I've been a champion of, is like fighting for the entrepreneurs.
Well, let's get real. First of all, you talk. So let's say that. Let's kind of repeat that. Wealthy, successful entrepreneurs, guys, should get advice, especially financial advice, from wealthy, successful entrepreneurs, not from bankers who have a salary who get paid strictly off what they tell you sometimes. Two, we talked beforehand. I'm not sure if I'm going to mention this anyways because you're transparent like me.
Go for it. Yeah.
You said they restrict. You said, now this is stuff that we hear on the outside, and my gut always said that certain banking systems, certain people don't have your best interest in mind, but it's like our old generation, our grandfathers are like, financial advisor, invest in this. They do have your best interest. You actually made it a point to say they restrict everything they can't make a profit on. They don't want to talk to you. If something is amazing in terms of ROI and opportunity, but they can't make a profit on it or off you, they don't tell you, even if it's best for the people.
Yeah, you won't hear about it. And I remember sitting there, I remember finding out this amazing investment opportunity, amazing investment fund that was just killing it. And I was so excited. And I was kind of probably 3 or 4 years into the business. And I took it to our manager and I was like, hey, this is something I really want to invest my clients' money in. I see there's great opportunities here. And he's just like, it's basically a pay to play scheme. Like people have to pay for shelf space, just like at the grocery store, the cereal company pays extra to be on the middle lower shelf so you can see it. There's some great cereals who say, I'm not paying all that money to get on the shelf of the grocery store. Well, there's investments that are amazing out there that people should be looking at that just aren't willing to pay that massive fee just to sit on the shelf and be sold by these brokers and salespeople at Wall Street banks. And so if I was still at the Wall Street bank and a client said, hey, I've got questions about crypto and NFTs, and hey, what do you think about this real estate investment property I'm investing in? Or how can I save taxes in my business? I'm not allowed to tell you. I'm not allowed to talk about it. Like I have to send you somewhere else. And that drove me nuts. I was like, if I know what to tell the people, don't get in the way of me telling people what they need to hear. Like I do the research. I've done the investing on my own. I can speak from experience. And you're trying to block me because we can't make a profit off it. That just was never something I felt good about.
I almost feel like some of them are so involved. They almost trick themselves in thinking they're doing the right thing because they're so in the game. You know what I mean?
Yep.
I think sometimes you have to do that. So can you talk about a couple tips on before we dive in to some other things I really want to cover, some tips on relationship building and trust? Because I think a lot of people want to get better at relationships. They want to build better connections, and they want to do it in an authentic way where they gain trust, because I think trust is at the basis of every relationship. And if there's no trust, there's not really a foundation. So what are some tips that you've learned? Maybe it's innate. Maybe it's like your parents, you were born that way, that you're trustworthy because you value truth. But is there anything you could share with some of the younger entrepreneurs about relationships, patience, and trust in terms of business?
I think relationships have to be built on trust and be valuable. You have to be offering value. Okay, so on LinkedIn, I've got a decent following, 33,000 people, And I get messages every day from people soliciting stuff, and they're offering no value. There's no relationship. There's nothing. It's just like, they follow me and then they send this massive list of things that they want to sell me and that they're good at. And it's like, that's not relationship building. So relationship building is based on trust, and it's based on doing what you say you're going to do every time. It takes a lot of follow through and a lot of follow up, being reliable, being on time. If you say you're going to do something, doing it on time, and being valuable, maybe giving a little extra. Those are the things that I found have really built a reputation for me. And so when someone thinks about, hey, this entrepreneur is selling their business, or this entrepreneur has a really high income, their business is exploding, they need a really sharp money guy who's also an entrepreneur, I hope I'm the first one they think of, because I've built that, I've put in the time without the expectation of getting something right away. So the relationships, though, it's all about people. Like, when it comes down to it, business is about people. So if you're good with people, if you're trustworthy, if your reputation is good, and you do what you say you're going to do, and you give a little extra, then you're going to be the first person that they think of when there are big referral opportunities. And every significant breakthrough my business has had in the 20 years I've been doing this has been through people and referrals and relationships. It's not because I don't do seminars, I don't have mailers, I don't do that kind of stuff, because I work with a higher end client who's never going to see that stuff anyways. So to me it's all about relationships. Yeah. And that's critical. Your team, who you surround yourself with, the interests and associations you have, you will attract who you are. So if you want to attract bigger and better business and clients and relationships, you have to become something bigger and better yourself.
And I also think living it's important too. We've been on the call, you've been talking for 18 minutes, and I bet you everyone on this call and people that watch the replay already trust you. You talked about how your values are the main focus, as well as family. And you talked about turning down millions of dollars because it didn't feel right. So you have to actually live it. You can't talk about trust and relationships. You actually have to live it as well, guys, because he's living it.
You have to be authentic. In fact, I was quoted in a book, or my story was shared in a book called Who Not How by Dr. Benjamin Hardy and Dan Sullivan, famous entrepreneur coach. And they told the story of this $100 million client that came to me as a referral. And ultimately I rejected him because he was kind of a jerk. And he was kind of demeaning to my team, and just high maintenance, and wasn't a fit. And I was like, all weekend, I was like, well, we could make exceptions. We could probably just like figure it out, because $100 million is $100 million. I mean, this would, at that time, it would have been the biggest client I ever had. Not anymore, but back then it would have been. And I basically told the guy, thanks, but no thanks. And this is a guy who never gets rejected. So he was upset. He was offended. He was insulted. And I just politely said, look, we're just not a fit. And I think you're going to have to keep looking. But my team's respect for me after I rejected that guy went through the roof, because they would have been the ones dealing with him more than me. All the high maintenance operations requests and stuff. And so they were like, wow, Chad just turned down a ton of money because the guy wasn't a fit, and he would have burdened our team. And so I think those kinds of decisions, putting people and values over money in the short run, will build greater respect, confidence, integrity, and much more financial success in the long run.
And I feel like as I get older as well, like sleeping good at night is priceless.
For sure.
Don't you? Just sleeping good and having integrity and looking in the mirror and being proud that you are living your values. That's priceless. And I don't think a lot of the people I've talked to as well that are at the 50, 100 million mark, I feel like it is money first. And sometimes I don't truly believe they sleep good at night. You know what I mean? So sleeping like that, I feel like is priceless, especially with kids. You want to look at your kids in the eye and be like, I'm proud of myself of what I'm building. That's amazing, 100%. Man. So you're working with a lot of high net worth individuals. You're working with a lot of families, and you're helping them plan their financial future, which is a very, very big deal. And it's in an industry where we're not raised on money. Schools don't talk about money. There's all these false judgments. Rich people are greedy, all these things. So you're in a pretty
Right.
important industry. Can you talk about the process that you walk people through, or that you take them through, in terms of if they come to you and they want to make
Right.
money work for them and they want to build their future? Obviously you probably start with their goals and getting clarity, but can you walk us through just some tactics and powerful questions you can ask if people on this call really do want to build a great financial future?
Yeah, so I created and trademarked a process called the financial life inspection. It actually got featured in the Wall Street Journal. I think it was 2015, 2016, but this idea came about because 2008 to 2010, my wife and I started really investing heavily in real estate personally. And it was a great time, obviously. It was a deep recession. And we had an inspection company called 1000 Point Inspections. And I just loved their process of going through every house that I was looking at investing in and buying, and giving me this list of what was good, what needed a little help, and then what was really in bad shape. And so I was like, man, we don't really have that kind of inspection or diagnostic that's thorough, that's really sufficiently thorough in our industry. And so I created it, and we look at everything, and that's what clients love, is the process. We start with their goals and intentions, but we look at everything. We'll look at all their real estate investments. We'll look at their business and their QuickBooks. We'll look at ways. We just saved a client, like, we just went back. We're not CPAs, but we looked at their tax returns, and he said taxes was important to him, and we helped them amend their returns from 3 years ago and got them like a $62,000 refund check out of the blue. I mean, was it worth it to pay $8,000 for a plan when just one little finding gave them 60 plus? Of course. So the process it starts with a question though. If we're having this conversation 3 years from now, so it's February 15th, 2025, what would need to have happened in your personal life and your financial life for you to feel happy with your progress? And so we skip into the future 3 years, and we look backwards, and we talk about just that 3 year, because it's hard for people to imagine 20 years into the future, but 3 years you can do. Where do you really want to make progress? And so sometimes they want to sell their business. They want to grow their business a certain amount. They want to have a certain amount of money saved up. They want to have a certain level of passive income. They want to have health goals and family travel and things like that. You know, my wife and I have traveled the world, and so I love to talk about different travel tips with our clients, and where we recommend for families and things like that. So I think the process is really comprehensive and thorough, but what makes it most valuable is I've been there and done that, and I'm speaking from experience, and our team specializes in high income entrepreneurs and families. So I see a question on there. What is the smallest account size to build with Chad? I think for us, it's the first way people access us is through the financial life inspection planning process. Whether they become a full-time investment client or not depends on if they have enough money, but they don't have to be, they don't have to have millions of dollars to do the planning process. And I think that's what's important is I have a lot of free resources on LinkedIn or my website, and I've published a couple books. I'm working on a third book, but so there's a lot of ways to kind of learn some of the stuff I've shared over the 20 years without necessarily hiring us. So we're not a fit
At
for
least max
everyone.
that out first, right? At least read the
Yeah.
books and
Yeah.
do the life inspection and do that
Right.
stuff before you hire him as well.
Yeah. Yeah, exactly.
Which,
Yep.
like you said, value add is huge. So you're adding value first. You have a lot of stuff online, and you
Yep.
have books out on Amazon, and
Yep.
you can check out his website as well, guys, too. Is there anything you can share? Because this is not, the focus is not, guys, just making money. I feel like you guys are really, really good at that, right? Whether you're already making six figures, seven, or even higher. But it's really keeping your money. So let me ask you this, and I want to talk about some of your favorite investments over the last couple of years. Where do you see entrepreneurs, young and old, mess up over and over and over again? Where you want to shake them, like, what are you doing? Like, where do you see the same mistakes happening?
Oh man, I have a list so long.
Let's say top three.
Yeah, so biggest mistakes is being completely distracted, being caught up in what everyone else is doing, and maybe saying, oh my gosh, that person made lots of money doing this, and so I should go do that. And so they get distracted with their time, with their money, and their attention. So distractions are a big thing. Entrepreneurs are great at building their business. They're not great at a lot of other things. And so people will make lots of money, but like you said, it's about keeping it. And what do I do with it once I make it? Where do I optimize that? And then sometimes they shift their attention and they think they're going to be professional investors when really they should just partner with someone who's good at that and does it every day. And so keeping your eye on the ball, your biggest growth opportunity is probably in your business. It's not in a stock. Maybe you got it early on Bitcoin and you made millions of dollars. That's awesome. But I think your greatest opportunity is to focus on your business and explode that and have diversified professionals helping you with other areas of where the money should go. Because what happens is you take your eye off the business and you start saying, okay, now I'm going to be a full-time investor. And then the business isn't growing and you're not hitting that potential that you really could get by growing your business. So consider your business like a small cap stock, a small company stock that you're exploding to the moon. And then have your money being professionally invested and managed so that you're not stuck with all of your wealth and equity in the business. You're actually taking some money out to grow somewhere else so that excuse me, so that eventually you have that total financial freedom where the business is fun, but you don't depend on it financially. Another mistake I see is just being all over the place. And so there's no coordination. There's nothing that's actually working together. And when it's not working together, you're going to be paying high fees. So you're wasting money and expenses for investment people, insurance people, real estate people. You're overpaying everybody and nothing's coordinated. So you might have lots of overlap in your financial life. It's just scattered. We just met with someone who had a few $1,000,000 in the bank. They had all these different private investment deals and anything they got excited about, they put a little money into. And his wife was like, if something happened to him, I have no idea where anything is. I don't know who to call. I don't know how much we have. So part of our process was really just getting them totally organized and on the same page. And we created a dashboard where they can see their whole living balance sheet. Everything updates automatically. I think it's just see this nice picture of like, what do we have? What do we owe? What are we making? Where is it? And just that clarity, I think, makes a big difference because entrepreneurs are typically ADD, ADHD. Their energy is all over the place. So getting clarity, getting organization, coordination, working with professionals, keeping your eye on the ball, growing your business, not trying to be an expert in 20 things, be an expert in one thing. That's how you're going to get wealthy.
Yeah, I'll tell you, doing that, because I was that type a couple of years ago, and getting it organized was the greatest hack for my clarity and peace of mind. And almost it's almost you have a different level of motivation to continue making money and investing it when you have clarity and it's on like one page and you can see it all.
Totally.
It's amazing. That's a game changer. So everybody should be focused on getting clarity on their financial plan and keeping it on one page or a spreadsheet where it's simple. And it takes some work. It takes a little bit of headache, but when it's done, it's a game changer. So that's a big one.
No doubt.
What about I see a lot of people now. I think we've seen in this culture. I used to work with a lot of people, Chad, where they've never had money. So all of a sudden they make 100K or 150K and their car's 60K. I'm like, wait, what are you doing, dude? You're like 21. Your car payment's $800.
Right.
I was making $500,000. My car payment was $150.
Right.
So I don't know if I was raised in a different way, but I see that more often than not. People spending so much money. Are you seeing that as a problem too, where people are living above their means too much? Or is that not a common problem?
We could thank social media for that. I would say keeping up with the Instagram Joneses. I think the people want to skip the journey and get to the postable moments.
Yep.
And I get that, but the important thing for me is to be an investor, not a consumer. So as much as possible, make decisions that make you an investor. investing is just delayed gratification, just delayed spending.
Yep.
So really, if you're putting money away today that could turn into 10x or 50x or 100x what you're putting away, it's going to be worth it. It's going to take some patience, but nothing amazing is built overnight anyways. So the consumption obsession is definitely a problem. Getting in stupid consumer debt is a problem, but becoming an investor solves all of that. Deciding on what percentage of my income am I going to invest for the future. In fact, I posted a quote the other day that really talks about how you should look at each decision you're making, and especially for these young entrepreneurs in your academy. Like, you either get paid for decisions you made years ago, or you pay for decisions you made years ago. The choice is yours. So that's really it right there.
So my mom introduced me to Rich Dad Poor Dad when I was 18. Best thing she ever did. Just different way of thinking.
Yeah.
There was a point in my life, and maybe you've always had this, maybe you could share if you had it, where I started getting more excited about saving and investing than spending.
Right.
I like more fulfillment and enjoyment from delayed gratification than instant pleasure. And it changed my life. So it's interesting you say that. Now I've become obsessed with investing and letting the money grow and letting it work for me, and making a decision now that will pay for itself when my kid is 10 and 20. So did you have that moment, or have you always had that mentality where you get more excited about making your money work than spending it on a Ferrari?
I think it started really when I just joined this career. So I wouldn't say that I was always like that, but when I started to really understand the power of compound growth.
Yeah.
And I'll show for the people watching. So this was my first book, Stress Free Money. So this is overcome these 7 obstacles to find financial freedom. The second book, though, is called Smart Not Spoiled. And that's the 7 money skills kids must master before leaving the nest. So in this book, I'm actually telling people how to talk to young people about the 7 key success aspects of money. And chapter 1 is invest early and often. And all I'm talking about is how to really introduce compound interest in investing, and what different things can kids invest in, and what should they understand about stocks and real estate and crypto and all these other things, and compounding growth from a young age, what impact. So once I taught my 14-year-old son, I'm like, you realize you could start investing now. And eventually what you started is going to build to pay you more than any job ever would pay. And his eyes lit up. He's like, are you serious? Like, that's incredible. So we created a little investment plan for the money he earns from his business. So
my thought process is, and he's lucky to have a dad like you, and thank you for sharing that. But my thought process is, how is that not taught?
Yeah.
In school?
It's not. That's why I wrote the book. I don't know.
It's insane to me.
Well, I would say one of the reasons I think it's not taught is because the people who are in positions to teach or write curriculum haven't learned it themselves. Mm-hmm. And so they're not the right teachers. I'll tell you this too, in your audience. I co-founded a company called Gravy Stack. I
checked it out and it's amazing. I love it. I'm gonna get my kids on it.
The app, when it comes out, we're hoping June of 2022. But when it comes out, we have some big shot investors. We actually just talked to Damon John's team and a couple other people to get a couple really high name celebrity investors on board. But I think it's going to be a big deal. It's really about gamifying financial literacy, financial success for kids, which they're not getting interested in it because no one's teaching them and it's not fun. And so if we can make it fun and make it interesting, we can change.
But they can set goals with allowance. They can set goals with their business.
Yeah.
I checked it out. The video is amazing. So
thank you.
That's cool. So that's coming out in June. Well, reach out to me and I'll definitely help you get that out there and promote it. That's one of my greatest passions is educating the youth and educating young people on money and just giving them guidance, because I never got any guidance. I followed all the rules in school. I put in 15, 20,000 hours, and then I go to business school, and then I come out with no help and I'm broke and I'm in debt and I'm confused. Like, wait, what did I just spend the last 15,000 hours doing?
Right.
So I don't want kids to go through the same thing. So I'm glad you came out with that. That's amazing.
Thank you.
So before we end this, in terms of cash, inflation, the current landscape right now, what are your thoughts on what's happening right now? Is it good to have cash at hand? Is the market going to collapse a little bit and then you want to go all in on real estate? What are your thoughts right now? The general landscape of what's happening
It's
with
a
the
good
government,
question. Yeah,
inflation, everything, cash. Yeah.
it's a good question, and I get asked that a lot. When inflation is high, and it's incredibly high, it's 7.5% right now, 40-year highs. Inflation is high, borrowing is cheap. You have to be a growth investor. You can't sit on the sidelines. No one can time it perfectly, so you can't sit in cash and just say, I'm going to wait for a crash. People have done that since 2016, and they've missed 100% run up in the S&P
Yeah.
500 in stocks. They've missed 50 to 100% in real estate. They've missed Bitcoin was up 57% last year. Like, if you're sitting on the sidelines, your money is losing 7.5% a year. It doesn't pay when Robert Kiyosaki says when they're printing money, you cannot save money.
Mm-hmm.
And so you have to be a growth investor. So the climate is scary out there. The economy has a lot of concerns. That's okay. That's why you get paid the big bucks when you're an investor, because you take on the uncertainty and that risk. And so if investing only happened during certain times or comfortable times, or when you're confident about what's out there, you're going to get a way lower return. Invest through uncertainty, be patient, be growth focused, look at it as long term, be patient. I think there's opportunities in every single growth equity market. If you're under 50 years old, none of this matters anyways. You're going to be investing for decades. And so in decades from now, if you could go back 20 years, would you buy some land or houses on the beach? Yes, you would. Would you take loans out and buy stocks? Yes, you would. Would you buy cryptocurrencies 15 years ago? Yes, you would. Because when it comes to decades, most of these growth assets
Appreciates.
significantly appreciate. And so don't worry about the moment. Be a growth investor, regardless of what's happening, but especially when there's inflation.
That gave me chills because, and I want you guys to please conceptualize this. And when you said under 50, we have 19-year-olds on here, 18-year-olds.
Yeah. Huge opportunities for anyone
Yeah.
under 40 years old. Huge opportunities.
So we have quite a bit of rentals and investments and duplexes and fourplex. I've been very blessed with parents that were into real estate, and I got in early. We now hold, and it's passive income, but every property we've ever sold, Chad, if I go look at the value now, it's 3, 4, 5, 10x.
Yep.
So it's like, there's no point in really ever selling in terms of just letting it build, because even houses that I got max dollar for, they're 3 times. There was a house I sold in Washington, 2012 or 13, and I got max dollar. I bought it for 2 something, sold it for 360, 380. It's like 880 now.
Yeah.
I could have just held it, but it's like, well, you're getting top dollar. You never know what the market's going to do. It's like every house I've ever sold, it's way up.
Yeah. So I would say this: the greatest asset you have as an investor is time.
Mm-hmm.
That's the greatest asset. So be a long-term investor. And I see Chad said I'm 42, still under. Absolutely, I'm 43, so you got plenty of time.
You guys are young.
Yeah, if you were 60, I'd say the same thing. You're still young. Julie said, if you have 500,000 right now, how would you invest it? As a fiduciary, I wouldn't tell you a specific investment until I understood your goals and could really assess your situation. So it would kind of be like going to the doctor and saying, hey, if you wanted some medicines right now, what medicine would you take?
Yeah.
I don't know. It depends on your situation, your health. But I would just say this: I'm investing for growth. I'm investing to try to go above inflation rates because I need my money growing in value, not eroding in value.
Another question, characteristic, all high net worth individuals that you've connected with, what is like a characteristic that they all have?
That's a great question. I would name a few. I'd say they're very intentional.
Mm-hmm.
Meaning they have a purpose and they know their purpose. They don't waste a lot of time. They're not distracted. They're not easily interrupted. They're honest. They're generous. Most of the high net worth successful people I meet are very generous. They give to different causes, charities, churches. Like they're just very generous
That's
people, and
amazing.
they always have been. They were generous before they were wealthy. I think I've seen that in almost every client of ours. So they have a
That's
mindset of abundance, not a mindset of scarcity. They're not competing. They don't believe it's a zero sum game where it's like, if I win, you lose. There's plenty of business deals and opportunities and wealth out there for all of us to succeed.
That's huge though. The abundant mindset, I think, is crucial. And the ones that I've dealt with too, they're certain in a way. It's hard to persuade them. They're like certain in who they are and what they want.
Sure.
And there's not a lot of comparison. So have you seen a lot of them just focus on bettering their best? They're not like, hey,
Yeah.
but he did this.
Yeah, they're not worried about that as much. They're very focused on what matters, and they're not distracted by. They're not gossipers. Also, I'd say that they're not caught up in gossiping and comparing. They're more about creating and building.
Is there any you can share in terms of some of your favorite types of investments now or in the last maybe 12 to 24 months and then further the next 12, 24 months? I know we talked about NFTs and you are bullish, you like crypto and NFTs, but is there like a philosophy or a principle that you have more? It sounds like more important to you than just like real estate, crypto, you have standards.
Yeah.
Like, so talk about that real quick.
Some of the criteria I look for when making investment decisions are, is it something that seems like it's just hype and excitement? Is it something that seems like a fad? I don't necessarily believe in doing it because someone else just made lots of money doing it. I think that's an easy thing to a trap.
Yep.
I remember an early client who did really well in home healthcare. His business was exploding. And lots of our mutual friends said, well, he got really wealthy with doing home healthcare. So maybe home healthcare is the answer. So I should start a home healthcare company. When really they should just look at the principles of the entrepreneur and his work ethic and his drive and how good he is at sales and things like that. And so when I'm looking at investments, I'm not looking at what someone else just made lots of money from. It's more about the growth prospects. Like clearly technology through the pandemic has been a winner because people are remote, they're home more, they're on Zooms, they're using technology, they're looking at ways to be more efficient without travel, let's say. Decentralized financial instruments is very important. People are seeking freedom from oppressive governments all over the world, oppressive institutions, banks, and things like that. So those themes are very, I think, very important, and they have a long runway ahead of them. I still strongly believe, though, in also investing in real estate in the stock market.
Mm-hmm.
And, you know, the stock market really is just the biggest companies in the world. So investing in the idea of worldwide innovation and saying, I want to own equity in worldwide innovation, to me, that's an obvious no-brainer. And can I also find opportunities to invest in real estate? Like I've bought in the last few years, we bought a lot of medical complexes. So real estate in kind of the southeastern United States, Georgia, Tennessee, Alabama, some in Arizona, Texas, but places where there's a lot of net positive migration, buying complexes, commercial real estate buildings that are leased out, long-term leases from doctors, because healthcare is more important. People are doing a lot of stuff with healthcare. It's getting expensive. People are living longer, but using healthcare. So we feel like the steady rents from these medical complexes are a great investment. So in the last couple of years, personally, my wife and I have done that. So I think
So you're really in tune. You're in tune with the market.
I'm paying attention.
You're not blindly investing. And it goes back to what you said about high net worth, intention.
Right. For sure.
It's something that you can kind of see just how you're talking. You're focusing on what's happening. You're not focusing on trends. You're focusing on reality of the market.
Yeah.
I think that's a big, I want you guys to decipher. We talk about this all the time. The people that will crush it the next 10 years can decipher real value from hype. And I think because of the NFT market, the crypto market, because of everything happening right now online, the hype meter is at an all-time high. Yeah. And there's rug pulls and people losing money. So I think being intentional is such a game changer as well. And my parents taught me too, real estate's one of the safest investments. People will always need a place to stay. There's always going to be people in and out. There's renters. In one of in the town I grew up in, there's like no rentals. There's no rentals.
True.
Like
Yeah.
the real estate market is crazy. So it's cool to hear you talk about that, because I feel like it's just a safe bet. I mean, nothing is 100% surefire, but real estate's pretty close if you have the right standards. You know what I
Yeah,
mean? So
it's definitely an asset you can't ignore, even though the prices are high.
can you end with helping someone's money mindset, helping someone become more abundant, based on partly how I grew up, the beginning of my life, how a lot of people I talked to grew up. There wasn't a lot of money talk at home. There wasn't any financial education in schools. And a lot of people still have, Chad, a bad money mentality,
Yeah.
where they feel like money is bad, or rich people are greedy, or all these
Right.
things. And it's a reflection of their past. It's a reflection of how they were brought up. And it's actually holding them back now, because I've never met someone who doesn't respect and appreciate money that has any. Most people that I know that have no money think money's bad, which
Yes.
it makes sense, right? So
Yeah.
is there anything you
Yeah.
can help them with, and maybe a process you can walk them through to help them understand money's just a reflection? It's not good or bad. It's not emotional. It's just a
Yeah.
tool.
I would say if you resent people who are wealthy and successful, you're never going to attract that into your life. Look for people who are successful that you can admire and find out what you like about them, follow them, find out what they're talking about, get inside their head. And that's I post on LinkedIn every day because I get so much feedback. I don't need to be on there right now, but that's the one platform I still have where I'm sharing something every day that I think is insightful. And it's because of the constant feedback I'm getting of people saying, wow, this, like, I only log into LinkedIn just to see what you're saying. And it's like, all right, I got to keep sharing stuff on there, because I think when you can get in the mind of someone who's had some success, then you really can start the pattern in your own life. Money is a magnifier. It makes you more of who you already are. So if you're an arrogant jerk and you get lots of money, you're just going to be a real big arrogant jerk. But if you're a generous, amazing, cool person, you're going to just be able to do more cool stuff and help more people. And money is just a means to an end. It's not the end. It's not going to solve your problems. People can have lots of money and still be struggling with mental health, or miserable, or having a failed marriage, or whatever. Like, it's not going to solve your problems at all. It might make life more comfortable, but you still have to become who you need to become, regardless of how much money you have.
Can someone post his LinkedIn in the chat too, guys? Amazing. I want everyone to follow him because of the value he's giving as well. Someone asks, the app is Gravy Stack, right?
Yeah, it's Gravy Stack. So you can sign up to be on the wait list on gravystack.com. And then the app comes out hopefully in June. We're making lots of progress in the beta version right now.
Amazing. And then mental health tips for investing from Dylan.
Yeah, mental health tips. I just think forget FOMO. FOMO is a real thing. It's a real thing. Like, really smart people I've seen make major mistakes because they have regret over not getting in on something or missing the boat, and so they make big financial mistakes. I think just staying grounded, being steady, being patient. Investing is not supposed to be super exciting.
Yeah.
If it's going to be successful, it's going to be long term. It's going to be patient, So
one of the best things I think I want to remind you guys, business growth, building a real business and making sure that is continuing to make profits where you could take those profits and invest them, is probably one of the best things he said. Because I think we're in a society where it's like, forget a business, I'm just going to invest in the next meme coin. Right. And they don't have an actual business. That's one thing the Academy helps people with, is building a real business that is scalable, that actually gives you some not only some equity, but gives you some leverage to be able to build a lifestyle. So that was huge. Trust, focused on relationships and trust, and growth investments, being an investor, not a consumer. Focus always on values, which is one thing I was attracted to you by right away in terms of your lifestyle and your vibe, your business, what you're doing. Values first. I love that. And then be proud of what you're doing so you can lay in bed at night and sleep good, and feel like what you're doing is something you can share with your kids and be excited about. Dude,
yeah,
it's
it's important to make money, but it's more important to make a difference and make an impact.
That's huge, man. Follow him on LinkedIn. Also, his books are all on Amazon. Type in his name, they'll come up right away. I appreciate you, man. Thank you so much for your time. Is there any last words you'd share, maybe with your younger 18-year-old self, or if you're in a stadium and there's like 100,000 kids like waiting for advice from you, like something they can take action on leaving that stadium or leaving this call? Is there anything you'd want to share?
Yes, I would say the limits the limits you have on yourself for your potential are literally self-made, and therefore anything that you believe and dream is possible is absolutely possible. Stress-free money, a stress-free future, where financial stuff is not an issue anymore, is absolutely within reach. But going for that at all costs is not going to be worth it. So I've always said this: any success, any financial success or business success at the expense of failing in your family is not worth it.
Wow.
So take care of the people around you, take care of the inner circle. The more love in your relationships and your family, the more successful you'll be.
Huge. Thank you so much, man. I appreciate your time. And the world definitely needs more people like you, sharing wisdom and knowledge, and leading with values and family first. So appreciate you for not just being a world-class investor, world-class founder, CEO, but really being a world-class dad and a world-class husband as well, man. Respect to you. Thank you. Let me know if there's anything I can do to help you, and I appreciate you.
Will do. Thank you, guys. Appreciate it.
See you guys.